back to Brashonomics, everyone. Want to thank all of our guests for joining us this afternoon. Up now is Ryan Leopold. Ryan Leopold joins us from Cobalt Mortgage, is a certified mortgage planner with over $1 billion in loans funded over the course of his career. Ryan, how are you?
I'm good, Heather. How you doing?
Good. Well, I don't know how common it is to get your realtor and your mortgage broker in the same office. I don't know how often that really happens, but I bet that buyers have a lot of questions that they'd like to ask their broker, but they ask their real estate agent. So I thought it'd be great if we could get Sandy and Alan back on for just kind of a conversation about some common questions they've been getting from clients. Maybe what are some of the most, frequently asked questions, and just kind of go from there. Because if their clients have certain questions, I'm sure whoever's listening and other buyers out there have them as well.
I think that's by far the most efficient way to bring value to your listeners, because I can just kind of go on in different subjects and go down the tangents that we go down. But
I love your tangents, Ryan.
I appreciate that. Well, I'm sure we'll find one here or there. But getting real questions from people who deal with real estate agents, who deal with the consumers out there that are on the streets looking to buy and sell houses, and the mortgage obviously is a huge part of all that. To get their perspective and hear what the community's saying would be good, and I think that's a lot more valuable. So, I'm excited.
Well, it's your show now. What
Let's
do you want to talk
about?
about?
All right, we'll start with Alan. Any questions you tend to see your buyers or sellers, or just anybody in the community, have when it comes to the financing things, especially when we're flat out in a different mortgage world than we've, I guess, ever been in, and specifically in a different mortgage world than where we were in 2007?
Sure. A lot of times my clients ask me, should I talk to a mortgage lender before we get started? And of course, that answer is absolutely a resounding yes.
You're like, what? Yes.
Yeah. And I don't have to. We don't even have to go down that. They already know. But why pre-qualification? What a lot of my clients ask me, well, what is it? I know I have good credit. Why do I have to do something beyond that?
That's a great question. That's probably one that I answer every day. And so here's the approach that I take, and I think most lenders take, is there's a difference between a pre-qualification and a pre-approval. So usually what I do is I'll talk to a client for maybe 10 minutes over the phone and just ask them general questions. So first, the consumer always needs to know that anytime you go to do a loan, there's three main things that lenders look for. They want to know about your credit history, and at the end of the day, your credit score. They want to know you have a job and how have you been in your industry and how much money you make. And then they want to know how much money you've saved up, and of the money you have saved up, how much you use as a down payment. So just by getting a feel for those three situations, a lender can give the consumer an idea of what they can qualify for. So you always want to know what you qualify for and what you can be approved for, and then you want to lower it to where you feel comfortable as a consumer, okay? But that's not formal at all. That's really just a conversation, okay? 40% of all credit reports have an error on them.
Wow.
40%. And we're talking about a parking ticket that you may have gotten in Kirkland 2 years ago that got sent to an old address that you never knew about. Seriously, it happens all the time. So if you're thinking about buying maybe in the next 6 to 12 months, no matter when it is, it's better to meet with a lender up front and actually go through the formal approval process. So if there's a credit issue we need to fix it today, not 6 months down the road.
Do things like that, what I would think of as just a small little ding on your credit, does that matter?
No doubt about it. So one of my really good friends has been a financial planner for 15 years. He is the most anal guy ever, okay? 800 credit scores. He does everything to keep it tip-top shape. I've done multiple loans for him. And then one day, he was looking to do a refinance, and he calls me up, and we get it going. And his credit score literally went from 800 to 650 by one unpaid parking ticket in Kirkland that his wife actually got 2 years earlier that hit their joint credit.
See, his story from before didn't come from nowhere. It's real life.
It's true.
Yeah.
And this is
How
somebody
annoying is that, though? 150 points? That's huge.
And he's been fighting that for 3 years now.
Oh, jeez.
Okay? So these things happen a lot, and more now today. There's different things we can do to get these issues resolved faster as opposed to later, and it doesn't need to take 2 or 3 years to get it up. We can get it. We can get credit scores adjusted in 2 or 3 months if we work together on it. So credit score is one thing, and this just employment status, employment history is important. Just because you make money doesn't mean that's what lenders always look at. If you're self-employed for less than 2 years, you got to look at 2 years tax returns, or You have to be self-employed at least 2 years to be able to look at that income as qualifying income. And then somebody may say that they made $50,000 gross, but if you're writing $30,000 off, you really only made $20,000.
Right.
Okay, so it's stuff like that. Gift for down payments. A lot of lenders don't like that under specific programs. So that's where that process of a pre-qual versus a pre-approval come into play. And just meeting with a lender and going through that process doesn't cost you anything. So meeting with a good lender who's going to take you through that process and guide you and get you on the right track, even if you're not looking to buy for 6 or 12 months, I think is crucial. Good question, though.
Great answer.
Thank you.
And
Sandy?
how does the concept of a rapid rescore come back into that when you're talking about fixing things on credit scores?
First, explain what a rapid rescore is.
Good question. So you can rescore your credit. If you fix an issue, we can get something rescored by basically showing proof to the credit bureaus, our credit reporting agencies, that issue is resolved.
Right.
Okay. And that, let's just say my buddy's credit report got hit from that parking ticket, and I'm able to produce a letter from the city of Kirkland saying, hey, that was wrong. We sent the ticket to the wrong address. They give me a letter that says this is inaccurate. I can get it rescored within 24 to 48 hours, and that would be removed. Now, that rapid rescore process is only for the sake of getting your credit score improved for basically a short period of time. That doesn't mean it's going to be resolved with all 3 credit bureaus for the long term. So the consumer still has to go through sending that letter into the credit bureaus and going through the process of making sure it's removed for the long term, but it can be fixed on a short term if you have proof.
Okay, so they would lift that just for the moment of getting into the loan for the home, because it's really not missing a parking ticket 2 years ago. I wouldn't think has anything to do with whether or not they're going to pay their mortgage. But being able to show that you actually can say that this wasn't the case can help them get that mortgage to begin with, is what you're saying.
Absolutely. And even though that ding in credit, let's say an unpaid parking ticket, may not affect your ability to get a mortgage. Okay, but I'll tell you, there's a huge difference in interest rate between a 650 credit score and a 750 credit score. That's really, and there's a lot of more tiered pricing over the last couple of years as opposed to where it used to be. So a 719 credit score is a different interest rate than a 721 credit score. Okay, so every point really does matter. So anything you can do to improve it. And even if it's coming in and having consultation with me and me showing someone how to get their credit improved just through natural events like paying down balances, not closing accounts, things like that, that is worth having that consultation even if they're not going to buy for 6 months. And inevitably what happens is somebody says they don't want to buy for 6 months, but tomorrow that perfect property comes up and they're not ready and prepared, and we're in a short inventory market, someone else will get it under contract. So get it done regardless and know your options and be prepared so that way you can take action.
Absolutely. So how would you recommend I coach my buyers and sellers on finding lenders?
I would say first and foremost, I would say trust the advice of the person who's been doing this for a long period of time. So you've been doing this a long time. I'm sure you have a great network of lenders that you've trusted and had great experiences with. So my advice is always to go out of your way to nudge them, encourage them to go in that direction. I see too many, and this is my opinion, I see too many real estate agents being passive about that and saying, well, here's 3 business cards, and you call them all and make your own decision, or okay, you already pre-approved, then that's cool, just send me the letter. That's not the way I would handle it. Because when I'm referring real estate agents out, I don't say, here's 3 agents you should go interview. I'm saying Sandy is the best. And these are all the reasons why she's the best. And in this kind of market, you can't take your chances. So I would say it's either going to be a referral from professionals who know a good lender from not. And then I would say be friends of friends or anybody you trust that had a great experience. And I just think now a good lender in a competitive market and being organized and structured up front is crucial if you really plan to buy a home.
Well, I think it's important to know that a realtor really doesn't get anything from referring their client to a good lender. And I think people might be like, oh, they're just referring me over because they are getting something out of the deal. But that's not the case, right?
Can't.
Yeah, they can't.
That's a really great point. I think people are just kind of apprehensive. And number one, I think distrusting of our industry over the last 5 or 6 years, and rightfully so. Distressing of lenders, and and more, not as much of a way, but realtors as well, because we're all kind of part of the problem that happened. But yeah, everybody feels like there's kickbacks happening, and that the referrals aren't genuine. And I think it is important to know that the agent gets nothing out of it other than peace of mind.
Yeah.
That it's going to be a highest probability of a smooth and uneventful transaction, and that's what everybody wants at the end of the day.
It's true, and that's one of the things that I look for with lenders that I work with and recommend to my buyers, because if I know that there's a lender that's going to be responsive, be courteous, be attentive to my client's needs, and be able to get things done on time and in the way that they need to be done the first time around, the chances of that deal actually closing go way up. And it's an emotional process for the buyer anyway. If I can remove any undue stress by knowing that there's a lender they're working with that has their best interests at heart and will take care to make sure everything happens the way it should, that's a little bit less stress for the buyer to deal with, and they are moving along through the process in a little bit more comfort.
Absolutely. Well, I'm going to interrupt. Sorry, Ryan. We're actually going to go to break real quick, and we're going to finish this conversation when we come back. Thanks so much, guys. You're listening to Brashnomics. That was Ryan Leopold, Sandy Walsh, and Alan Johnson. We'll be right back.